Here on the Transparent FX Academy, every day I share my best market breakdowns, showing you guys how you have to analyze the market both from a technical and in order flow perspective to see where you can be looking for the next potential opportunities in the Forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I want to speak about EURUSD. Now, why do I want to speak about EURUSD? First of all, it is one of the most traded pairs in the market, actually the most traded pair. And at the moment, we actually have quite interesting price action and also structure for a potential opportunity. So as usual, I will be performing a complete multi-time frame analysis. So starting from the higher time frames and then going down to the lower time frames. And I will be covering both the technical and also the order flow perspective of this market by checking the commitment of traders, which is basically what the non-commercials in the market are doing, which are the biggest speculators, so hedge funds. And we will be checking the data for the euro and see how they're shifting their positioning in time. And by the end of the video, by using a combination of our technical and order flow analysis, we will be able to understand where we have the highest probabilities for a potential trading opportunity on the pair. And as usual, I will be keeping this as educational as possible. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we have a market which has just provided a very strong impulse to the upside, followed by this correction. Now, in general, when you have a situation like this, in which originally the market had created a move to the upside, correction, higher high, and then break back down. Usually in a situation like this, you have this left shoulder here, which is acting as strong resistance. And when the market then goes and tests this resistance, you expect the market to reject it to the downside. However, in this case, what happened is that since the US dollar is extremely weak at the moment, EURUSD broke back above this structure. And in this case, now this previous resistance, which was supposed to be turned support here and resistance after the break to the downside, now that the market has basically created a fake breakout of the level with this move to the downside, this zone is now again support here, meaning that in this case, since the market is currently rejecting exactly the previous high and making this move to the downside, there is definitely a quite high probability that we will see the market test this zone and then get rejected to the upside, possibly providing a higher high and breaking above the supply that the market is currently testing. Now, why are we seeing this move to the downside? Well, as I just said, all this zone here is very strong supply and resistance. In fact, exactly from here, all this move to the downside was created, and currently we're testing exactly the same supply. So recapping quickly, here in the monthly, the reason for which we're making this move to the downside is because we have strong supply and we can expect the market to test this strong support before then creating a rejection to the upside, meaning that we can expect some short-term weakness and then long-term strength here for EURUSD. Going down on the weekly time frame, what do we have? Now, here on the weekly, we can see that at the moment we are actually already testing quite strong a weekly support and demand. In fact, exactly during this move to the upside, the market found resistance at this level. We can see here how the market created this candle here. So a red candle rejecting the resistance that the market found at this zone, which means that the market here has previous resistance, which now that the market has broken it to the upside, is turned support here. So at the moment, we are testing previous weekly resistance, turned support, and we can expect the market to reject this area to the upside, possibly with the creation of a higher high. So here, monthly and weekly time frame for EURUSD are both aligning for a potential move to the upside. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Going down on the daily time frame, what do we see? Now, here on the daily, the price action that the market has just created is extremely clear. We can see how the market, in providing this move to the downside, is currently printing an overextended M pattern. In fact, we can see how we had the move to the upside, retracement, move back up, and currently the market is melting to the downside. Now, in general, after the creation of an overextended M pattern, what you expect after that is for the market to provide a move back up to complete the pattern at the neckline, which is basically the previous support turned resistance. Or at least in the case of an overextended M pattern, you want to see the market provide a correction minimum to the 0.382 of the Fibonacci taken on the daily impulse. So from the high to the low of the impulse. So monthly, weekly, and daily are all indicating for a potential short-term continuation to the downside before then a rejection back up for a completion at the neckline. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing, we can see that lately with the last reports, net positions have been increasing. In fact, we went from having 66.8k net positions all the way up to having 107k net positions. So net positions are clearly increasing, and even though we're seeing this short-term move to the downside, we can see that no shorts are getting added from an institutional perspective. In fact, the weakness that we currently see on EURUSD is actually coming from longs getting closed, not shorts getting added from an institutional perspective, which is a quite important thing, because it means that they are not interested in this short. This is just profit taking from the longs that they had during this move to the upside, which we clearly see here reflected in the net positioning. And at some point, since they're not adding shorts, the move to the upside should continue once again, possibly for the completion of this M pattern that we have already identified. So there is a potential short-term longing opportunity back up, at least to the 0.32 of the Fibonacci taken on this impulse, but possibly even for the completion at the neckline. So how we will be approaching this opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes from a directional perspective combined with the COT data. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding EURUSD to our watch list. And as soon as the market will provide to us one of our valid entries, at that point we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside, for the market to complete the pattern at the neckline or at least at the 0.32 of the Fibonacci taken on the daily impulse. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also click the link in description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day I give you a new daily market breakdown showing you how to apply the strategies with the entry, stops, and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.